Good morning. And the global cues are to India's support, but there are opposing factors at play too. First, what the US markets did in Friday's session, and you will see a bit of an uptick there for the Nasdaq in particular. The Dow and the S&P also about 0.5% to 1% higher. Nasdaq up 2%. Quite interesting the kind of differentiation in the moves. More importantly, from an Indian markets perspective, yes, that the world markets did okay. The 10-year yield, let's stick to that. The 10-year yield at 3.95 was much higher. Now we're seeing in the yields closer to 4%. That's a bit of a dampener. You kind of think about what's happening to financials, why they aren't doing well. In some manner, I would reckon that the 10-year yield also has a part to play there. But there is a change that has happened in terms of this morning. So the global news flow is important before we get to the gift nifty. So like I said, S&P 500 closed near 1% higher, and the Nasdaq was about 2% higher, third straight week of gains. Two-year Treasury yield fell though slightly on Friday as data showed slowing inflation. There is news that India and UK could sign the trade deal this year, as per Reuters. But also from a markets perspective, BOJ announced unscheduled bond buying operation, and Goldman and Morgan Stanley see BOJ's tweak boosting Japanese stocks, and that's what's happened, viewers. Today, Asian markets are trading well. There was about 1.5% to 2% kind of a gain on the Japanese markets early morning in trade. Wonder if that's playing out on the gift nifty. I think we'll get the gift nifty quote in just a second. But while we corrected on Thursday and stayed stable on Friday, let's get the gift nifty up if we can, or at least get the what quantum is the gift nifty trading at. It's trading flat, maybe a positive marginal bias, or no big negative bias today because the world markets are doing okay, because the other cues are kind of against us. And I'll get to that in a moment, right? I mentioned about how higher crude prices, higher yields, and FI flows not being positive, all of those are a few dampeners. Now, what did the Nifty do in Friday's session 2 days ago, right? It ended flat. The bank Nifty decreased about 0.46%, but the broader markets increased, with the Nifty mid cap up about 0.5%, small cap 0.2%. India VIX decreased by 3.59% and closed at 10.13. Nifty Realty was the top performer, followed by Nifty Energy, and Nifty IT declined the most. So that is the setup. That is what happened on Friday. A lot of liquid stocks with high volumes gained in trade. India Woods Housing Finance, and there's newspaper reports about how Samir Gehlot is reducing his stake, or a Tata Power, Tata Chemicals, LIC Housing Finance, NTPC. Those are the kind of stocks that did really well. And these are large liquid stocks with very high volumes, which had a move in Friday's session. Now, what's the trade setup there for the day today? Well, one would reckon that the uptrend has paused, but not entirely upended. Key supports are at about 19,500. Very difficult to see the bank Nifty outperforming in the very short term because of the factors that I mentioned, higher yields as well. And both the higher yields and the higher crude prices kind of play spoil sport to large further upticks. That is the problem. And Goldman Sachs, for example, this morning has said that they see the global oil market moving from a surplus to a deficit. We are approaching winter in 2 months' time or 3 months' time. All of that doesn't augur well. But let's wait and watch. What is doing well in India, though, is power and power related stocks. Continuous improvement in fundamentals, high investor interest, lots of HNIs buying into some of these power names. And therefore, you will see this space continuously being in focus. Foreign investors have sold about 1,000 crore shares yet again. DI is bought about 1,634. So in the last 2 or 3 days, we've had some serious selling from the FIs. Are they preempting what is happening to crude and yields? Who knows? Um, Earnings are in focus. Adani Green Transmission, there's Bosch, there's GAIL India. More importantly, there is Maruti Suzuki coming out with numbers. All eyes out for that one. There's also, of course, Navin Fluorine and Sumitomo Chemical from the chemical space today. And of course, Welspun India from the textile pocket. Can this bring a surprise, much unlike what some of the peers have done? Remember, Welspun had a very strong last quarter. Can they do an encore is the question. And there's, of course, UPL, and all eyes will be out on what UPL does. The expectations are very muted. So let's wait and watch if UPL can spring a surprise positively out of its hat. Well, that is, we'll get to know when we get to know. For now, let's try and focus on stocks that could be active at 9:15 on market open, right? So first up, Gland Pharma. I'm getting all the stocks in news first, then get to the results. So Gland Pharma got zero observations and a no action indicated classification from US FDA inspection of its Vishakhapatnam sterile oncology facility. May react. Piramal Enterprises, the numbers were a ho-hum, not too many people impressed, but they've approved a buyback, 1.4 crore equity shares. Shares will be bought at 1250 a piece. The current price at 1072. So there's a bit of a difference there. Maybe the stock reacts. Time will tell. Divgi Talk Transfer Systems. It's an expensive stock. It's not a cheap one. In terms of valuations, I'm saying, not in terms of price, but I received an order from an overseas customer to supply components for an OE program worth rupees 180 crores. The production is expected to begin from Q4 of fiscal 2024, so some time away, uh, about a couple of quarters. Yes, a couple of quarters away, but who knows? Maybe the stock reacts positively. NTPC will separate the coal mining business into unit NTPC mining. So that is part one. And then part two, the numbers. Revenues were flattish, but margins improved 29.8% versus 25%. EBITDA up 19% at 12,855 crores versus 10,796 crores. And the net profit zoomed 23% to 4,907 crores versus 3,978 crores. So they did well on the operational metrics. And that's why NTPC, along with the fact that they've given this announcement about separation of the coal mining business into NTPC mining, well, companies do that when they see valuation accretion into the separate units. Wonder if all of this leads to NTPC reacting positively today. Let's wait and watch. Now we'll see GAIL reacting positively likely, and we'll get to that in a moment. But since we're on NTPC and power, let me talk about the other power-related names. Since I said that power is seeing some favor, right? So Inox Wind, revenues up 65% at 348 versus 210 crores. EBITDA at 31 crores versus loss of 45 crores. Net loss at 63 crores versus loss of 129 crores. They've halved the loss as well on their bottom line, and they've turned EBITDA positive. So the stock has run up quite a bit, so that's the caveat that's to be kept in mind. But I reckon this should please the street. So not bad. And it's a turnaround quarter for Inox Green, by the way. Revenues at 63 crores versus 61 crores. EBITDA at 30 crores versus 18 crores. There's a PAT of 3 crores versus a loss of 11 crores. So a turnaround quarter, and certainly could react positively. United Breweries could react negatively. Revenues down 6.7% at 2278 crores versus 2434 crores. 2438. The expectations were 2633, so much lower than estimated. Margins 9.8 versus estimated 12%. Full 220 basis points on that base is large. Net profit down 16% at 136 crores. The estimate was 207 crores. Nearly 12% volume decline seen during this quarter due to RTM changes and a bunch of other factors. But RTM changes, I reckon, is the predominant factor. So net, not a great quarter. We'll probably see UBL reacting negatively on open today. MCX should react negatively. Sales up 34%, which is fine. 146 crores versus 109. Look at EBITDA, down 78% at 11 crores versus 49. EBITDA margin 7% versus 45%. PAT down 53% at 20 crores versus 41 crores. There's a lower than expected yield, plus the profitability impact due to the payout to 63 moons. Viewers would remember we'd spoken at length about the kind of numbers that MCX has to pay to 63 moons, and the sarcastic press release or the exchange release by 63 moons when they spoke with so much of sarcasm about what MCX is having to do. Well, it's showing in the numbers for MCX, by the way. Not a great set of numbers. Should react negatively, I would reckon. Brokerages too, not too impressed, by the way. Obviously so. IDFC First Bank numbers seemed good. NII up 36%. Gross NPAs improved. Net NPAs improved. PAT up 61%. Couldn't find too many faults with this. So you might see a positive reaction here as well. Equitas Small Finance Bank, NII up 28%, gross NPAs flattish, net NPAs flat, PAT up 97%. Who knows? May react positively. A lot of HNIs interested in this stock, interestingly. RPG Life QOQ did a good number, really. Sales up 25%, 148 crores versus 118 crores. EBITDA margin at 22% versus 13%. PAT up 114% at 22 crores versus 10 crores. A good show, could react positively. Chalet Hotels, a mixed bag, if you will. Revenues at 310 versus 317. So in line. EBITDA 109 versus 135. So that's the problem. There is a bit of a downtick there. As also in EBITDA margins, a bit of a downtick there. Net profit is up, showing a 210% number, 88 crores. There are some tax benefits that come into this quarter, or the tax losses in the last quarter. All of that led to that, because otherwise difficult to see EBITDA margins being so low, and yet the net profit number being seeing a pump up. So there are those one-offs there in chalet hotels, but net maybe a number not as impressive as Indian hotels. You have to admit there, because if you look at the EBITDA number miss of Indian hotels, it was about 100 basis points. Here, the EBITDA miss is much higher on chalet hotels. So bit of an issue. We will hear Sanjay Sethi today, so that is something to watch out for. Lakshmi Organics, the numbers were again okay. The reason I'm bringing this up is the revenues were up 3%, but the EBITDA margin, net profit numbers not not the best. Maybe marginally better than estimated on the net profit front, but otherwise not the best numbers. The one which will move a lot or could move a lot is Siemens. Shareholders have opposed the sale of low voltage motors, geared motor business, because remember the news was that Siemens had proposed sale and transfer of units to Siemens Large Drives India, as per the exchange filing. Now shareholders have opposed this, and because the majority of minority shareholders approval was needed for this. And why is this important? Look at the Jefferies note; it tells you why. So Jefferies has a buy on Siemens with the target price of 4520. They say that the sale of Siemens low voltage motors division to parent has not been approved because a majority of minority shareholders approval was needed for this transaction to go through as per SEBI guidelines. The implied loss to shareholders was 189 rupees per share, because the proposed sale value was at an EV to sales of 2.1 times versus the company multiple of 8.4 times. The fact that this hasn't gone, shareholder activism, kudos to shareholders, they're able to do this. And this would mean that Siemens could see a bit of a bump up in the session today. Uh, more than the fact that the share price will move up, because it only impact people who currently have holdings in Siemens, or maybe who is smart enough to maybe even buy it at a good price today if the stock is meant to go up further. I have no idea how much it will go up. I'm just saying it will have a positive reaction. According to Jefferies, the difference is about 189 rupees per share. The point being that shareholder activism leads to an event which ideally should never happen, not happening, which is a great sign. So watch out for Siemens, watch out for Gale. UBS has a double upgrade to a buy. The target price has been raised to 150 from 80. The business turning from cyclical to structural as per UBS. UBS says they think consensus is yet to fully appreciate the upside to realize tariffs. And according to them, it's trading at 24% and a 50% discount to a 10-year price to book as well as PE, and a deep discount in investment value. And therefore, they are constructive on Gale. Watch out for Gale in addition to Siemens, which could do well. And of course, all the other result reactions that we will see. By the way, Marico, the numbers were okay. I thought the systematics note captured it well. So that's where I'm bringing it. They were buy with the target price of 645. The same company is confident of clocking a 350 basis points improvement in gross margins and 20 plus EBITDA margins for FY24. The revenue trajectory, according to them, will pick up from the second half after a flattish second quarter, driven by gradual volume pickup. So don't expect material things in Q2 as per systematics. The WAHO business can see high single-digit growth from the second half with softening inflation. Essentially, margin improvement and a strong second half. Is that good enough to bump up Marico today? Don't know. But is it a good investment rationale? Maybe for the second time, if the stock doesn't go up too much, maybe. Remember, all of these maybes are also subject to what crude prices do, viewers. So as we wrap up trade setup, keep in mind that India's trading at good valuations, or at reasonably high valuations, and a few factors uh, might turn against. And if they do, then you've got to be careful. Crude prices, like I said, yields, like I said, flows. We've had 3 strong months of flows. Flows are marginally at the margin turning against if the FI flows continue to turn adverse. And I'm not saying they'll disrupt the market too much, because the local flows are strong, by the way. But FI plus DI flows combined positive kind of bumps up the market. That not being negative is a bit of an issue. But the longer term numbers don't seem to be too bad. And I would reckon that there's so much of money waiting on the sidelines to come that a 4 5% dip into Indian markets, I would reckon that we will see buying coming in. So if for whatever reason the index would go from circa 20,000 to even 19,000, forget 18,000, even 19,000, we might see some bit of buying starting to come in. So bear that in mind. Uh, but yeah, leverage trades, maybe not, because a few of the technical factors, like I said, turning marginally against. So that's to be kept in mind. Thanks so much for tuning in. A clutch of very important conversations today, all through the day. So we'll have, of course, Moshe Khatri on IT company earnings. He's an important name and therefore interesting to hear what he has to say. Then Sanjay Mukim, Head of India Equity Research at JP Morgan, coming in on Talking Point at 10 a.m. today. You will hear V. Vaidyanathan, IDFC First Bank at 10:15 or 10:20 or thereabouts. Also here, Rajdeep Gupta of Root Mobile coming in at 10:30 a.m. There is Saugata Gupta of Marico at 12:05. That's to be tuned in for. Like I said, Marico is an interesting one. Nitish Mittersen of Nazara comes in at 2 p.m. And of course, like I said, BEL at 11:50 a.m. And that's an important number because they clocked in such a fabulous quarter with such high flows. Important to understand from BEL as to what they have to say about the quarters ahead. Thanks so much for tuning into the Trade Setup. Have a great day ahead.